Have you ever felt like picking stocks is this super complicated game that's just for Wall Street insiders? Well, today we're going to crack open The Little Book of Investing Like the Pros by Joshua Pearl and Joshua Rosenbaum. We are going to walk through their 5-step framework, which is designed to turn pretty much anyone into a more disciplined, thoughtful investor.
So, does this sound familiar? You hear a hot tip from a friend, you see a stock that's just rocketing up, and you jump in, basically just hoping for the best. The book calls this buying on a hunch and a prayer, and it's an incredibly common, and let's be honest, an incredibly risky way that a lot of people approach the market. And this right here just illustrates the core problem so perfectly. I mean, think about it. Pilots, doctors, they need years and years of intense training. But as the authors point out, anyone, and I mean anyone, can open up a brokerage account and start buying stocks with literally zero training. That kind of freedom, it can put your financial health at serious, serious risk. And that is exactly the gap this book is trying to fill. It's not just giving you some vague principles. No, it provides a real, concrete, repeatable framework that used to just be for Wall Street analysts, but it makes it accessible for you, for me, for everyone. The whole point is to turn guessing into a methodical process. And look, this is not just another pop finance book. In the foreword, the legendary investor Howard Marks calls it a complete and thoughtful orientation to investing. I mean, when someone like him endorses a book like this, you know you're getting a serious toolkit, not just a bunch of hot tips. So our goal here is the same as the books. We want to demystify this whole, often intimidating world of investing. We're going to break down these professional strategies so they're actually understandable, so you can build a process for picking stocks and, just as important, for managing your risk. All right, here's our game plan. We'll start with that big mindset shift from guessing to having a process. Then, we're going to dive into the 5 steps: finding ideas, figuring out which ones are the best, doing the real homework, deciding what a company's actually worth, and then finally, making that big decision. So the first, and maybe the most critical shift, isn't really a tactic. It's all mental. It's about moving away from those random bets and adopting a real, professional framework that you can use over and over again. And here it is. This is the core framework. You should think of this as your roadmap for any potential investment. You start wide, generating a whole universe of ideas. Then you filter them down, you do a super deep dive, you figure out what they're worth, and finally, you decide if and how they fit into your overall portfolio. See? Every step just builds logically on the one before it. Okay, so let's get into the process itself, kicking off with step 1, finding ideas. I mean, a great framework is pretty useless if you don't have good ideas to feed into it, right? The first question is always, where do you even start looking? Well, the book breaks it down into 3 main ways. First, you can use screens to digitally filter the entire market for stocks with specific traits, like a low price to earnings ratio. Or you could go bottom up and just become an expert on one single company. Or you could go top down, like if you believe electric vehicles are the future, you'd then start looking for the best companies inside that trend. Okay, so once you have this long list of potential ideas, you need a way to filter them, right? That's the whole point of step 2, to efficiently cut that big universe down to a short list of the most promising ones that you can actually, research in depth. And to do this, the authors give us a quick 5-part framework. So for each idea, you just briefly outline your investment thesis, what the business does, who's running it, what the big risks are, and you get a preliminary feel for the financials. Now, this isn't the deep dive yet. Think of it as a structured first pass to see if an idea is even worth more of your time. All right, now for those few ideas that actually made the cut, we're getting into the most demanding part. Step 3, doing the homework. This is where you really got to roll up your sleeves and go from that quick overview to a deep, thorough investigation. This is the work right here that separates professional analysis from just casual speculation. You're pressure testing that initial idea you had. You're digging into annual reports, looking at competitors, all to find out if the company has what they call a durable competitive advantage, or what Wall Street loves to call a moat. So once you truly understand the business, step 4 forces you to ask a totally different question. What is it actually worth? And this is so crucial because, as the book points out, a great company can be a terrible investment if you pay too much for it. The key here is separating a stock's market price from its intrinsic value. The market price, that's just what it's trading for today. But the intrinsic value, that's what the business is truly worth based on its future cash flows. Your goal is to find a gap between the two, to buy something for less than it's worth. That gives you what's called a margin of safety. And that brings us to the final step. Okay, so you found a great company, you've done all the research, and you believe it's undervalued. Now you have to make the actual investment decision, which, believe me, involves a lot more than just clicking the buy button.
And this is so, so important. No stock is an island. You have to think about how this one single investment fits into your bigger portfolio. How much money should you put into it? How does it affect your overall risk? That right there is the essence of portfolio management, balancing the risk and reward across all of your investments, not just one. So, by following these 5 steps, you literally transform investing from that hunch and a prayer gamble into a disciplined, logical process. It's a framework that gives you a structured way to make confident, repeatable decisions, and that is the real cornerstone of long-term success.
And that leaves us with one final thought to chew on. Looking at this professional framework, what do you see as the biggest risk, or maybe the biggest gap, in your own current investment process? Because having a structure, it isn't just about finding winners. It's about protecting yourself from those really costly mistakes.